What's going on, guys? Welcome back to the channel. We are going to be giving you a very important CCIV update video. We're going to go over the ortex data as well as touch on the technical levels for those of you guys that are in this trade. This is something you'll want to pay close attention to, as well as after that we're going to play an interview from Peter Rawlinson. He is the CEO of Lucid Motors that was on Cnbc, basically going over how they are going to grow the company in the next coming years, the investments that they are making, and how they will provide value to you as a CCIV shareholder. So I think everything in this video is very important to pay close attention to, and I don't want to waste any time getting into it. Make sure to hit that like button for me. I do greatly appreciate it. But first things first, let's get into the ortex data, and shorts are not covering their short positions. It's getting insane. We're almost to extremely elevated short interest levels. Technically we are, but we're approaching that over 20% level. So that is getting to be a lot of short interest and shorted shares. But we do have a short interest change of 0.6%, return shares of 1.49 million, borrowed shares of 1.82 million. So that is a net gain to the total shares that are sold short of 331,000 shares, bringing the short interest, like I said, to 19.84%. Current shares that are sold short of 41.08 million. So a huge amount of shares that are sold short, as well as the short interest percentage of free float is out of this world. 20% for a company that has major catalysts on the near-term horizon. We know of the vote date that is going to be on July 22nd. We're going to be merging into Lucid Motors July 23rd, and then sometime in the next 60 days, hopefully, we have a delivery date that will be coming that will for sure send CCIV stock much higher, causing, if the shorts haven't covered, a short squeeze at that time. So I do think the shorts are just completely unaware of how shorted the stock is. So I think it's kind of flying under the radar because people aren't really focusing on it, right? They're focused on a lot of other stocks. Something else worth noting, the share utilization is at 99.83%. So that is essentially telling you out of 100% of shares that are available to be lent out, 99.83% of them are lent out. So this is a very high number. This is extremely high. So it's hard to get your hands on shares to sell short if you are trying to do that. Now, I do also want to point out the average days on loan is 27.9 days. So this is probably another reason why you're not seeing shorts cover, because obviously they are down in their positions, but they're not down a whole lot, right? They're probably down 50 to maybe 100, maybe close to 100%, but they're not down multi 100%. So they could just put up more capital and stay in their short positions. But once you really get over 30, once you get to about 33, 35, even $40, that's where you're going to see a lot of forced recalls and forced liquidations or margin calls start to come in for a lot of these short sellers. So that is pretty much everything as far as the ortex data you guys need to know and be made aware of. But as far as the technical levels are concerned, we are still bullish on the MACD, especially in after hours here, up 0.30%, only down 2.52% for the day. So I consider this a slight consolidation period. We could rally 10% tomorrow. We would never even know this 2.52% day did happen today, but we hit a low of $26.23, and that's pretty much where we're sitting right now at about $26.40 cents. So that is pretty much where we're at. We're kind of at the lower end, but I do expect a bounce into tomorrow. The RSI is slightly oversold at 43.55, so nothing too crazy there, but we are, let's pull this out to the day chart. 50-day moving average is currently at $21.77. So we're far above that, so we're still in very bullish territory, but we're going to want to watch the volume here because the volume is quite sporadic. 2 days ago, this was June 28th, we seen about 18.5 million in volume, and then today we seen about 10 million less in volume, which is a huge drop. So you're seeing big volume fluctuations. You're really going to want to see the volume pick up and keep picking up like a staircase type movement. That's kind of what we've seen back here, but it's still so sporadic. But I think the closer you do get to this actual vote day and merger day, the more volume you will start to see going into the stock, and probably more shorts that aren't going to want to stick through that whole situation and probably going to start covering their short positions. But I do expect a squeeze overall, and that is why I do have trades in this. Now, as far as the 50-day moving average on the 15-minute candlestick chart, that is at $26.65. cents. So as long as we can get above this and close above this, I think that is a very bullish sign. A lot of trading algorithms and even people will be looking at this 15-minute chart and the 50-day moving average, as well as the 200-day moving average is at 26 cents, 22 cents. So you're going to want to watch that for potential downside. If you do break that, I would expect a bounce fairly soon. If you flush down there, you're probably gonna you probably have bad news, right? I don't see it going back down there unless you do get bad news. But that is pretty much all you guys need to know as far as the technicals and the ortex data. But now let's get into this interview with Peter Rawlinson, because I think this is very important for every CCIV shareholder to be made aware about.
That technology is very, very exciting, but I just go back to the valuation issue, which is I think that investors are trying to grapple with what kind of multiple they should be assigning and how they should be valuing these companies. Tesla obviously has a remarkable valuation that effectively means that it is bigger by market cap if you were to combine almost all of the current car makers together. The question is, you look at the valuation of your company, you look at the valuation of others. There's a lot more competition in this space. Do you think that investors should be using the valuations of some of the older car company models, the sort of classic companies, the Volkswagens, the General Motors of the world? Should they be looking at a Tesla when they look at you? What do you think is the appropriate way to think about it?
It's a fascinating point you raise. I mean, Tesla's commanding its valuation as future-looking, and also because it is in a preeminent position. It is the preeminent technology company in the EV field. That's why it commands such a high market cap. And there's now going to be two runners in that race. Lucid is going to join as a new force in EV technology. And that puts the US in an incredibly healthy position, having two front-running EV tech companies in Tesla and Lucid. And I think it's the technology that justifies those valuations. It's no longer the commodity valuation, how many cars you build, that determines the value of a company. It's the technology and the future potential of that tech. And our tech has got the future potential to truly mass industrialize electric cars.
Peter, though, how do you think then about a General Motors? They're aiming to produce, I'm looking here, by 2035, they want to have 30 new plug-in models arriving, and 30 new plug-in models arriving by 2025, and they plan to make a $35 billion investment.
Well, I really welcome what GM is doing and that commitment, but let's see how successful they are in implementing that. There's no such thing really as a market for electric cars. People often say, oh gosh, that market is being saturated. There's a market for cars, and the more better electric cars that come along, the more the penetration into the car market will be occupied by EVs. And that's why I welcome the competition, particularly Mercedes is coming now with the EQS. And this is great because Lucid Air can be compared at the top table with the manufacturer that invented the car, Mercedes-Benz, with the best offering from Stuttgart. And there's always room at the top. It's mighty crowded down below.
Right. Peter, you've said that you plan to put vehicles into production in the second half of the year. The second half of the year begins next month. So what's it look like right now for you?
Well, we achieved a landmark red letter day last Friday. We started building our quality validation run, production run of cars. We've completed our pre-production run very successfully. And last Friday, June the 18th, the last working day of spring, we commenced our quality validation build at our state-of-the-art factory in Arizona. And there's a big difference here, Andrew. The quality validation build cars are the cars which ultimately we will sell directly to customers once we've got the quality right. And that build is currently underway. This is a big step forward in our mission to industrialize Lucid Air.
You've said that you plan to deliver 577 vehicles this year. You have 10,000 plus reservations. Are you on schedule?
Absolutely, we're bang on schedule. And as soon as the quality is right, we're on schedule to release those cars, what I believe will be the best car in the world, to proud new owners in the second half of this year. We're absolutely on track for that.
And I said 10,000 plus reservations. What do the reservations look like right now?
Over 10,000 and growing. It's very heartening. And we're responding to the uptake and increasing demand for Lucid by accelerating. We're accelerating 350 million of investment, bringing that forward to get better vertical integration in our plant throughout 22 and 23. Right. We're also announcing an additional 6 to 7% overall investment in our plan, in our business plan, between 2021 and 26. And with that money, we'll be able to accelerate the growth of the company, secure and de-risk the risk factors, and also provide greater flexibility in terms of our mix of product. We're going to incorporate an extra 2.7 million square feet into our factory by the end of 2023. I'm very bullish about the future that this secures.